Let's take a look at the contribution margin in managerial accounting. The contribution margin represents how much money a company makes before subtracting out fixed costs. Is some money left over to contribute to the fixed costs? Let's look at some information for Level Up Gaming. Their sales for the month is 1,200 units. The sales price per unit is $1,000. Their variable cost per unit is $600, and their fixed costs are $300,000. Let's start with the contribution margin income statement for the month ending January 1st, 2022 for Level Up Gaming. We can determine their sales by taking the 1,200 units by the selling price of $1,000 to get total sales of $1,200,000. The variable costs can be determined by taking the 1,200 units times $600 per unit for a total of $720,000. Next up comes the contribution margin. This is determined by taking sales minus variable costs. So we'll take $1,200,000 minus $720,000 to get a contribution margin of $480,000. After we get the contribution margin, we'll subtract out fixed costs to get an operating income of $180,000. Next, let's talk about the contribution margin ratio. This is determined by taking contribution margin divided by sales. In this example, the contribution margin ratio will be $480,000 divided by $1,200,000. The contribution margin ratio will be 40%. This is most useful when the increase or decrease in sales volume is measured in dollars. The CM ratio multiplied by the change in sales dollars equals the change in operating income. So if Level Up makes an additional $120,000 in sales, the increase in operating income can be computed as follows. We'll take $120,000 in sales times 40%, and we'll get a $48,000 increase. Next, we can look at the unit contribution margin. This is the sales price per unit minus the variable cost per unit. In this case, the unit contribution margin will be $1,000 minus $600, or $400. The unit contribution margin is most useful when the increase or decrease in sales volume is measured in units. The unit CM multiplied by the change in sales units equals the change in operating income. So if Level Up sells an additional 120 units, the increase in operating income can be computed as follows. The change in operating income will be 120 units times $400, or $48,000.